Hello everyone, and welcome back to the Financial Design Studio YouTube channel. My name is Jake Turner. I'm the Associate Financial Planner here at FDS. Today we are going to talk all about 83B elections. Before we dive into the content today, please check out the video description below. There'll be some links to other resources down there, both on our YouTube channel as well as blog posts that we've written in the past. And if you like the video, give it a like, subscribe to the channel, that way you'll get updated every time a new video drops. All right, if you have clicked on this video, I think it's safe to assume that you may be a high income earner, but whatever your position is, you are receiving some kind of restricted stock. Whether that is restricted stock units or RSUs, incentive stock options, non-qualified stock options, any sort of company stock that's given to you as part of your compensation that is subject to a vesting schedule, meaning it is not yours at the time that it is given to you, but it vests over time. That we'll call restricted stock for the purpose of this video. So if you are given that, congratulations. It can be a great wealth building tool, especially if you're working for a solid company that is going to continue to grow over time. This can make up a significant portion of your compensation. An 83B election is something to consider if this is you. When you are given restricted stock, whether it's RSUs, ISOs, non-quals, any of those things, and you make an 83B election, you're essentially saying, I'm going to realize the income in this tax year of the grant that was given to me. And I'll walk through an example in a minute. Why would you do that? Well, if you think the stock is going to appreciate rapidly over time, and you don't want to be stuck with higher and higher tax bills as each tranche of that restricted stock vests, that may be a reason to do an 83B election. A couple of things. It must be done within the first 30 days of grant. Now there are some different rules for ISOs where you need to do it within 30 days of exercise. So be sure to talk with your company and make sure you understand exactly how it's going to work there. But the way you do this is you're essentially just filing a notice to the IRS, again within 30 days, saying I'm electing 83B. What that will happen is you'll realize the fair market value of whatever was given to you that year as ordinary income. You'll pay the tax on it. But then down the road, when those tranches vest over time, as long as you're holding those shares for more than 366 days, you're going to be paying long-term capital gains. So this can be a huge advantage, especially if you're in a 32, 35, even 37% tax bracket, to pay long-term capital gains at 15 or 20% instead of those higher ordinary income rates can save you lots of money down the line. So that's the 83B election. File it with the IRS, like I said. You also need to file it with your company so that there's record that you made this election. So let's walk through a bit of an example and see what the advantage could be. All right, over here. So let's say, for example's sake, I am given 10,000 shares. At the time they are given to me, maybe we haven't gone public, they're worth $1. But, forecasting out, we anticipate the price of the stock to increase over time. So in our example here, it's going to increase to $5 after 1 year, $10 after 2, 15, and 20 after 4. The vesting schedule for the stock that is given to me, it's going to vest over 4 years, meaning 25% of the shares granted are going to vest each year over 4 years, as I put in the example here. I am confident I'm going to stay with this company, where the projections are looking solid, so I'm going to go ahead and make the 83B election and pay the income tax up front. 10,000 shares at $1 a share, $10,000. I've got $10,000 of income for the year, and I'm done. I'm going to pay long-term capital gains on anything that vests in the future if I decide to sell it. All right, year one, $12,500 this is what these shares are going to be worth at vesting. As you can see, year two, $25,000, year three, $37,500, and year four, $50,000. I'm going to have $125,000 that I'm going to end up paying ordinary income tax over the vesting schedule of this initial $10,000 worth of stock that I'm given. But remember, if I did the 83B election, I only paid tax on that initial $10,000. I'm still paying tax when I sell this, but I'm paying long-term capital gains because I made this election up front. So as you can see, this is a very powerful tool to pay ordinary income tax on $10,000 versus $125,000. It can be a big tax savings over the life of that vesting schedule. So when would you not want to do an 83B election? Let's say you're not really sure, the company's projections aren't that solid. We don't really think that stock is going to blow up, and go from $1 to $20 or 20x in 4 years may not be worth it, just to give you the flexibility there. Another thing is, if for whatever reason you may think the company is not going to be around throughout this vesting schedule, certainly no reason to pay tax on money that you may not actually get in the future, or if you think it could go down. Finally, if you're not sure you're going to be with this company for the long haul, another reason not to do it. Because if you elect 83B, you pay income tax on restricted stock, and then you leave the company, any of those unvested shares you're never going to get anyways, so you paid tax on stock that you're never ultimately going to be able to use, sell, and enjoy in the future. So those are some reasons not to. So in summary, simple 83B election applies to stock that is subject to a vesting schedule. There are different types of company stock that fall into this 83B election possibility. You file with the IRS, you file with your employer within 30 days, either of grant or exercise in terms of ISOs, and that's it. It's pretty simple. So it's a very personal decision, but it is available to those of you out there receiving that company stock as part of your executive compensation. So hopefully you found some value in this video and learned a little bit more about what the heck that 83B election is. Please check out the resources below, check out our podcast Behind the Designs and all the videos here on this channel. Thank you for watching on behalf of all of us at Financial Design Studio. We'll talk.